Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So here, guys, as you could see, actually pure madness. If you take a look at the intraday charts, the sentiment changing is rather sharp, drastically at every time when the market is coming to 111 area. As a result of this performance, whatever, despite that actually we have really very strong intraday upside action and rally yesterday that we have discussed. Indeed, market has challenged the previous top, keep going higher, although it hasn't reached that 1130 area that we have specified. But anyway, so performance was rather strong. But take a look, by the end of the session, market has shown the pullback and have formed second grabber in a row. So we have here we have the grabber, this one, and take a look today. Once again, we also could get the grabber. I have checked on the futures, and indeed on the euro currency and the futures on the Chicago Mercantile Exchange, we also have two grabbers here. So that is a warning sign for the bull. So it seems that some bearish pressure right around 111 is becoming stronger, and market is trying to push through it, but well, it can't succeed. And this is important, just because with this performance it will could show that market can't close above this previous top, showing the Russian risk grabbing stops. And this week it also will be interesting to consider what will happen in relation to this top. It's also important because this is weekly top, and if market will fail to close for the second attempt above it this week with dropping lower, that might be important. From technical point of view, it could suggest deeper retracement. So today we also have a bulk of the important statistics. So gross domestic products and all stands around the retail sales, personal consumption, and not only in the United States, in Europe as well. And situation in the evening could be absolutely different compared to what we have right now. Meantime, based on recent performance, we could make some, steps. First of all, if you still have long position that you have taken on this retracement that we talked about, well, it seems that it's time to think about close it, or at least to manage your stop closer to your position, the break even, or even to move it higher to guarantee some profit to your trading. It's just because this performance, guys, on the top is not good for the bullish context. On the 4-hour time frame chart, take a look. We probably could still consider the possible butterfly that we talked about yesterday. It is not cancelled, and it probably still will be valid, but I suppose that it could change the shape. So here we could get some different performance, and that's the thing actually that we need to keep an eye on, because here is clearly Russian rinse. This previous top in market, despite this rally, wasn't able to complete the butterfly. Now it's dropping lower. I can't say currently concerning the whole butterfly whether the market will drop this week below these lows to cancel it, although in the perspective of the next week it is possible. But definitely here we should expect a bit deeper action with a high probability. So some second leg of the downside action here has very really big chances to happen, just because on this performance, and particularly on the hourly chart, if we'll take a look what has happened. So this clearly washing rinse in the shape of the strong, huge engulfing pattern. And as you know, as we usually do, this engulfing takes the shape of the ABCD on lower time frame. So it means that the consequences of the engulfing would be two-leg retracement with another extension to the downside. Supposedly it will be somewhere around 110 even. So we have confidence here, but OP stands mostly in agreement with the 50% support of the whole upward action. It's 110. That's at least that we could get. It's minimum downside target, but we will see what will happen on the statistics release. But keeping in mind this one, we could suggest that probably action down maybe will not be limited by just 110 target. It might be more extended, because grabbers themselves suggest the taking out of these lows. This one, at least. So, but this will trigger the consequences of the bearish pattern. So first is the grabbers. Drop below this area will be some kind of the double top on the longer time frame. Double top means equal distance to the downside. So will be somewhere around even maybe 107.75 or somewhere. So this will be really some like the nested doll. The appearing of the one bearish pattern could trigger the appearing on another one of the larger scale. That's why let's start today from this one, this possible action to the 110 area. Here just ABCD might be the not final shape, because if, for example, we will get something like this, so I'm not excluding it that it might be. So we could get the ABCD compounding retracement here. So if this will happen, it will not break the idea of the engulfing downward action, but it could mean that our OP target might become closer to the confluence area. But well, this is not the fact that it definitely will happen. Sometimes it happens. So we could get the cartilage people to sell here, and then our continuation to the OP. So if you are not sure where to take the position, you could, for example, take some part of your position right there, and this market will start moving higher. You could add more. When the ABCD will be completed, we will get some kind of the cartilage people to sell, and aiming on this target. So approximately it will be 110, 110.50 probably. At least to downward destination point based on the hourly chart. That's actually what we have from the euro, so it's becoming really interesting. Let's keep watching.